Welcome back to another episode of Dubai Works Business Podcast. This week, a really exciting topic and a really exciting guest on the show. A reminder that the show is powered by Zbooni. Zbooni app gives businesses free tools to run, start, and grow online, accept payments, build an e-store, create mobile invoices in minutes. While the interview is brought to you by Zbooni, the guest stories told are their own. In July 2020, Feras Jalbout founded Baraka, UAE-based startup, on a mission to connect young urban millennials to numerous investment opportunities. The CEO himself is a serial investor turned entrepreneur, and he's on a mission to educate and empower first-time investors who want to take full control of their portfolio and which choose stocks and companies and put their money through Baraka. So we'll be discussing their story, the investment market and its boom at the moment in the last 2 years in the millennium sector, and what the future looks like. So good morning, Faraz.
Good morning, Richard.
Thanks for joining us, and nice to speak to you. And yes, tell us, for those listening on the podcast they can't see, but you're working remotely with lots of books behind you. How long? How long have you done this startup from your current abode?
Yes, and I haven't read all these books to be clear, but yes, I have done this. It's funny, actually. We started July 2020, like you mentioned, in the heart of COVID, in this room, all over Zoom, and we got used to kind of living in the virtual realm. We've just moved into our office now, and now we're spending a couple of days a week in the office as well. So mixing it up a bit
Yeah.
now.
How was it starting off? Like, did you think it was good timing, and were you able to kind of raise funds and meet people and hire people remotely? And how was that?
Look, I mean, it was a different experience, right? Last year around March, COVID really started, hitting the world and the markets, and it was interesting for me as a bystander watching what was happening in the markets, right? Uh, COVID was having, a terrible effect on the economy, and the markets really dipped for a long period of time. They kind of fell, at some point at 30% below their peak. And while that was happening, they started recovering very rapidly. After this economic downfall, and so you started seeing the shift in behavior and investing behavior. And so I was watching that from here, and thinking, wow, there seems to be a structural shift happening in retail investing, and it kind of spurred this idea about why can't we have this kind of great product offering in our market. And that's kind of the basis of getting started, essentially. And so we started in the heart of the pandemic. I basically started having conversations about funding this kind of business during COVID, which was crazy in and of itself. And basically, we got started like that, and everything, like you mentioned, was done over Zoom. Hired the team over Zoom, raised money over Zoom. Um, for all intents and purposes, it was incredibly efficient because Zoom is incredibly efficient, but it was weird not having that kind of human touch. I used to be an investor, and we would never invest in anything that a person that we couldn't meet, or, a business that we couldn't go and touch. And the world changed, it completely changed. And so we got used to that virtual world very quickly. And so here we are. We're now
Amazing.
adjusting to the physical world.
Getting back to normal. Yeah. Wow. Wow. So, but finance, fintech, investments, such a big space, such a behemoth of an industry. How did you approach it? Like, what was your kind of way of looking at this, and how did you kind of enter a startup into this space?
I think I've always been really interested in this space. So I've been investing for many years, maybe 12, 13, 14 years, and
That was with venture firms, or was it that as well as a day job and kind of like retail investing?
so I spent about 10 years or so on the asset management side. So I was in with a couple of private banks in the region, and we were doing a lot of asset management for high net worth clients. And so this was, in public markets and those kinds of investments. And then the last 5 years I spent at a family office slash VC, and we did a lot of alternative investing, so alternative investment classes. And so I've been doing this professionally and personally for quite a while, and it's a real passion of mine. And when I thought about what I wanted to do next after kind of spending that much time in investing, it was investing. And then it became actually, well, what can you do in investing? And when we looked at the trend of what was happening around the world, thought about there's a structural shift happening in retail investing, and we need to do something in the region because it's not going to stop. This is a secular trend. This is taking shape. We've got amazing demographics in the region. 70% of the population is under the age of 30. It's pretty incredible. And for the kinds of products that we have, we're just not, at that time. Now it's increasing quite rapidly. A lot of competition is emerging, but there's just an incredible opportunity to serve the people of the region with world-class products, and that's really what we set out to do.
Okay, so uh, the status quo before your solution, in terms of if we just focus on, say, retail investment as opposed to sort of angel or seed or venture, if we talk about the public markets or even alternative, uh, up until now, there might be stockbrokers and there might be financial products provided at a retail level by well-known financial institutions or specialist banks. Is that what it was? And there were some of those available in the market. Is that how the status quo was? And what was the sort of problem, or why isn't that enough?
I think there's other providers in the market offering varying services, right? Some are, robo advisors, some are kind of retirement planners, some have, there are a couple of stock trading or investment platforms. But I think the gap that we're really trying to fill is one that encompasses several different areas. And it's not just having an investment platform. It's having, providing educational content. It's, creating a community for people to actually discuss investments with one another. When we surveyed the market, it wasn't just about the platform. It was really about this all-encompassing offering where investors could build their confidence, really start to understand what they were doing in the markets. It wasn't just, hey, give me, like a very kind of basic kind of long-term investment plan where you give somebody, your financial advisor, a few $100s a month, and that builds over time. What we want to do is educate people or help them really start to understand what they need to do to take
Yeah.
their financial future in their own hands. That's a big part of our proposition, and so we didn't see that. We didn't see that in the market. So this is a big part of our mission is to provide that.
Yeah, to educate people on money and how to make informed decisions. And that's very clearly evidence for people who follow your excellent newsletters and your content. And it's really nice proposition. It's very, a lot of kind of respect to how you guys have gone about that and how you've positioned and packaged the company. Related to that, the Baraka, my minimal Arabic, does that mean blessings? And how does that relate to, where did the name come from?
Yes, the name means blessing. I mean, it's often associated with the financial blessing, where in Islamic or Arabic culture, oftentimes you say, this is kind of this has been blessed upon me, for whatever reason. And so we think there's a good meaning there.
Yeah, nice.
And what we really want people to just get invested, right? Get invested, and hopefully that financial blessing will be bestowed upon you in some way, shape, or form. But you've got to do your part, and you've got to get invested.
Yeah.
And so that's kind of how we think about it.
Excellent. I mean, I get it. Cool. So, but for us, so if I'm setting up a financial advisory, like a wealth management firm, is one thing. If I'm setting up a brokerage, or if I'm setting up a private bank, which handles, say, high net worth, obviously there's barriers to entry there. There's licenses. It's highly regulated. So, is that why, like, to be blunt, why isn't there a Robin Hood in the region up until now, in terms of what are the barriers that one would have to go about to setting up a Robin Hood?
I think there are barriers around regulation, but I mean, they're not quite barriers, I'd say. They're more about just
Steps.
status. Yeah, they're just steps that you have to pass through, and they're primarily built for ensuring customer safety in various ways. And so that, you've everybody has to follow these steps. So we work closely with the regulator here to, follow those steps and get fully approved. And that's for the benefit of the end consumer. And so, I wouldn't call it a barrier. I'd just say that we have to go down this process to make it happen. And why haven't we seen a Robin Hood? I'm not sure. That's a good question. I think that in some ways the market has potentially been neglected by some providers, um, and whether you see one or not, there's a lot of new businesses coming online that will address certain opportunities in the market, and we'll look to fill some of that ourselves, by the products that we offer,
Will you
essentially.
will you go around the same way? So effectively, if I'm a customer and I'm on your waiting list now, which I think there's a lot of people who are on the waiting list for the app, and I sign up and I put money into trades. Technically, how does that work? There's been a lot of discussion around, for people who follow the stocks in the recent months around GameStop and a lot of terminology around Robinhood and the different types of way that they trade and how they're kind of set up. Are you for us essentially setting up a financial bank that can trade currency, or are you somewhere in between?
We're setting up a an investment platform to invest in stocks and ETFs, either in whole shares or fractional. And so we'll have over 4,000 securities when we launch. There's a wide universe there for people to invest in, and so that'll be our starting our first product that we launch.
Okay, can you explain some of those securities? So types of stocks and ETFs that will be there.
Yeah, so they'll be all US initially, and you'll have a wide platform to choose from. So we'll have all of the iShares ETFs, all of the Vanguards, all of the most basic ones that track the market. So if you're an investor that just wants to track the performance of the market and you want to be buying the S&P 500 ETF on a monthly basis, or on a yearly basis, or whatever, on as a means to kind of track that performance, a very viable strategy that a lot of people follow. We're going to make that available to you, so you can buy those ETFs and you can hold them, and they're real ETFs, and you'll in the case in some stocks where they pay dividends, you will earn those dividends as well.
Okay.
And then other than that, we've got some thematic ETFs that range, about robotics and space, and artificial intelligence and water, and all of these new themes that are emerging, which are vitally important to our demographic. And then of course you've got single stocks that range, the S&P 500 and the Nasdaq as well. So all
Hmm.
of your FANG stocks and others as well.
Okay, so basically a lot of the New York Stock Exchange or Nasdaq, that's what will be available to people here on Baraka.
Correct. Initially, that's right. Correct.
Okay, and it's fascinating. I want to talk about this region and what's available as well, but uh, just touching back on the kind of the narrative around Robinhood and around liquidity issues and things like that is is that something that you've considered, and structurally is that the type of platform that you will be setting up as well?
It's kind of a loaded question. I mean, I think what you're asking is, do we have an investment platform that looks and feels like Robinhood and gives you access to the same kinds of underlying securities? Yes, there's probably some similarities from that perspective. Do we? And then you mentioned liquidity. I think you're touching on kind of leverage and margin, if I understood that correctly. Do we offer kind of those kinds of service? No, initially we will not offer margin and derivatives and that kind of thing on our platform. Our platform is essentially an investment platform that where people put in their own money and they invest accordingly. Likes of Robinhood and some others. There's some instances where you put in $10 and get 100 in leverage, and that creates a potential scenario where could negatively affect the end consumer if they're not careful with how
Yeah.
they invest. So we take a different approach. We're taking a different approach initially.
Okay. I think more so just trying to understand it a bit more in layman's terms and technically in terms of uh traditionally if someone had a stockbroker, they would pay them a fee. If they qualify for a wealth management firm, they would pay fees. And then it goes down to the retail level where there are lesser fees which people might know of. So there might be apps and banks that are available in this region, and there might be fees of 10, 20, 30, 40, $50 per transaction. And what's happened in other markets is those fees don't exist anymore. So they've attracted, I think Robinhood has 15 or 20 million monthly or daily retail traders or active traders, which is a huge cohort. It's an amazing number
Incredible.
in a 52 state with the same population as the 22 Arabic speaking countries here. So that's a big number of people who trade daily for no fees, which is amazing. And you're into a really good thing. However, why are there no fees? And is that sustainable?
Well, in the case of Robinhood and some other platforms, there's been an emergence of a new kind of revenue stream that they call payment for order flow, where they sell trade data to certain market makers that trade before and after in milliseconds, micro trades, milliseconds right before and after, and they make very very small fees on very large volumes of trades, and so that's emerged as a new revenue stream for some of these neo brokers, and that's basically what subsidizes no fees. Sorry, no brokerage fees. Is it sustainable? I'm not sure. I think the jury's out, and I think that the GameStop situation has people thinking about whether they want to invest on platforms that do that kind of thing, and it probably will give rise to some kind of regulation or at least some thinking about how it should play out. It's not a consideration for us at the moment. We have no plans to sell trade data on behalf of our clients, and so it's something that we'll watch, but not something that's in our business model for the time being.
Okay, okay, fascinating. When you put this idea together and you went to speak to investors, what was the kind of insight that you had to show that there is appetite for this type of product in the region?
Um, I think if you know the region, it's a good question. I'm trying to think back now in July over Zoom what I was telling people why they have to give me money very quickly to build this, but it was. I think if you know the region, you understand the demographics of the region. They're incredible. They're truly incredible. Again, 70% of the population under the age of 30 is always very, very meaningful to people when they understand that. The other thing that is incredibly important to note here is that not only in the region but globally, millennial wealth is growing by 3, 4, 5x by some stats over the next 10, 15, 20 years. That's tremendous. There's a huge windfall of wealth that's being passed through to the next generation, and that creates a huge opportunity because as actually what we've seen in every industry is that millennials actually want their own brands, and so the local banks and the international banks and the old time brokers and all these, you can have new product offerings, but actually what the market calls for or what young people want are brands that really resonate and speak to their values. And so it's not just about renaming a product or launching a new product. It's actually they want the whole company to kind of resonate with their brand, with their values. And so that's the shift that's happening, and so that's the opportunity that we see, and that's the brand that we aim to create. It's for our demographic.
Interesting. Yeah, I think a lot of that is instinct as well, and having a good backing. Someone like you who knows the sort of investment market really well, um, is has credibility in this space. I think just a kind of question, and I usually keep this for the end in terms of the region as an emerging market, but it's very relative in valuations and investing. In any comparison, even the recent Angami IPO, the valuations in this region are a lot smaller than in the US. And the US, whether it's Silicon Valley or the current FANG and the tech companies that dominate the market and the values at IPO, it seems to be sort of and as you guys have Nasdaq and New York Stock Exchange products, that the whole US landscape ethos investing seems, and this huge $1 trillion economy seems to allow those type of companies uh, there, as well as a retail investor, and we don't have that. So in this region, so that's I guess the kind of question. Do you think that there will be appetite from this region to invest in US stocks, and then a follow up, probably a longer one in terms of what's happening here? But if we take the first one first, do you think that people will want to kind of jump on US companies with their savings and investments?
I think so. I mean, the stats that we see here is that the appetite for U.S. products is growing tremendously. We know that in Saudi, for instance, last year there was a 6x increase in the U.S. stock market from Saudi brokers. That's a tremendous number, and so we think that there's a huge appetite for it, and we think actually um, it will continue to grow as next gen continue to kind of want to invest and gain more and more of their wealth. I think that they will continue to allocate to not just the U.S. but international markets as well, as local markets. I don't think that goes away. So yeah, I think that market continues to grow for sure.
Okay, interesting. And I do want to kind of jump in and talk about the tech startup and ecosystem here, but just before that, when you were advising clients on investments and even alternative, did you use regional bourses or stock exchanges? And can you just explain that sort of ecosystem for people not familiar with it, of what stock markets are in the region and how active they are?
So I think I'll take the first question around advising clients. Was the question, was I advising them about local stock markets?
Yeah.
So no, in my role previously, I wasn't advising about local stock markets. We were, I was working with international private banks. We were building, portfolios of assets that's span the world. And so in some cases there were allocations here, but in a lot of cases it was allocations in other parts of the world that span different asset classes. So real estate, stock markets, alternative assets, private equity, venture capital, all of that. And so our job was building these portfolios, and so building resilient portfolios that could withstand sort of financial markets. And it was more for kind of wealth preservation and growth over a long period of time. So it was slightly different to how we think today. Although now by diversifying your stock market portfolio, you can actually build quite a resilient portfolio in and of itself. And so I think that's one of the messages that we try to get over to people is actually you can build your own portfolio if you choose to, if you become educated enough to do so, if you buy enough of a diversification of assets that takes you quite a long way. You don't have to put everything into one stock, right? You don't have to put it into two stocks. There's a wide universe there. We're starting with 4,000 securities. Buy several of them. You'll be better off over the long term. That's kind of part of the messaging. That's part of the educational piece that we pass along.
As mentioned at the start of this episode, Dubai Works is powered by Zbooni. Live with Tracy is a live streaming membership workout program hosted by Tracy Harmouche. It features live chats with wellness experts and is the home of an extraordinary online community which motivates you through new online friendships. Hosted on Zoom at Live with Tracy, uses leading digital payments app Zbooni, which helps the community to easily play for access to all the live sessions.
So yeah, that's part of the the kind of content that we try to get across to people. I missed your second question, Richard. Sorry.
So no, it's just really related to, and as part of that answer, why not? Why hasn't more sort of money from, say, clients based in this region gone on to the local stock markets? And yeah, and can you explain the kind of stock market opportunity in this region?
I think there's definitely an opportunity in markets here in the region. I think there's a number of initiatives that are taking place behind the scenes, um, uh, that are that are trying to spur kind of stock market activity here in the region, and we'll see how those play out. But I think that in the region, especially in the UAE, there's definitely an opportunity there. So we know, for instance, NASDAQ has launched an SME exchange, would be phenomenal for the region, right? We need a place where young local companies can go public in a way that attracts capital from all over the world. And so that becomes a great opportunity not only for the UAE but for the wider region. And so we'll continue to see how those shape up. And, I don't know that people haven't been putting money into the market here. It's not something that I track enough to fully comment on. But I think that a large part of the local population holds a substantial amount of wealth in the local markets. And so, I mean, I don't know that that's gone away. Actually, what we've seen is the MSCI inclusion of the Saudi, Kuwait, and the UAE indices has actually made those economies, or made those markets, I wouldn't say boom, but has lifted them and has drawn international attention to these markets. So
Mm.
that's a great thing. That's what we need more of, essentially.
And there are the three main stock markets and stock exchanges in the region. Is one bigger than the other, or do they compete with each other?
I don't know if they compete with each other. I think Tadawul is largest by volume, and that's not
In Saudi,
that's
yeah.
just, yeah, that's probably by virtue of their size of their economy.
Mm.
Uh,
Okay, interesting. Okay, we'll take a quick break, and after we'll talk more about how Feras has gone around building Baraka and the opportunity for millennials in the region, and also touch on other things like crypto. Okay, we'll take a quick break. And we're back. So yeah, so first we heard about how you went around setting up this platform. You seem really relaxed for us. You seem really kind of chilled. You must have been. It must have been scary or daunting leaving, a traditional sort of investment career, the opportunities that go along with that, to taking this on your own. Were there a few kind of moments, or has it gone pretty well so far?
Look, so far so good, and I'll tell you, I've never been more excited to do something, and so my days are full. They pass by very quickly, and it's just it's a lot of fun more than anything else. And so when you're having fun, it doesn't feel like work. So
Good.
uh, yeah.
And how did you get the right team around you? Did you know a lot of people in the industry, and how is that coming around?
Um, yeah, definitely knew several people in the industry, but just like any other kind of business, we put feelers out there, had conversations with people, and we're really trying to bring on the right people. And so we take our time with hiring. We try to bring on people who are equally as passionate about the mission to build this product and to serve the demographic here in the region. And so we have a great bunch of people who are from all walks of life. And I think that's the most interesting thing about our business. Actually, we don't have many people that have worked in finance. And, we have a graphic designer who's never read a piece of, information about financial markets that now designs for financial markets. We brought somebody from PwC who comes from a consulting background that is now building an app or an investment business as a startup. Our CTO Kunal comes from a very traditional background as well. People from all walks of life, and it creates this amazing diversity in the business. And you can kind of see how we don't approach financial markets like many others, and that comes with our content and our look and feel. And that's the point. We want to make it more relatable.
Yeah, it's incredible. I saw a stat that I think one of the founders of Stripe mentioned when they launched in the UAE this week. I'm not sure the exact figure, but it was a startling number of the opportunity that they saw for startups. And I think you and people like you embody that sort of spirit of, a new wave of sort of millennials building products and platforms for millennials. Irrespective of what you're doing in terms of that retail investment market, there seems to be a real kind of energy around the startup ecosystem at the moment, even if it's on Zoom. Would you agree with that? Do you think we're kind of in a really
Incredible.
exciting, yeah?
It's an incredibly exciting time. It's an incredibly exciting time. We see a lot of young companies. We see a lot of companies pivoting. We see a lot of companies switching gears because one has to be dynamic in this economy. And people are chasing talent, and they're chasing investment dollars, and it's all happening in real time. But it's exciting. It's great. It's great for the ecosystem. And so we're seeing a lot of great companies being built, and it's definitely an exciting time.
And your focus very much for us is on the GCC, the this region, but you're predominantly sort of built in the UAE. Did you are your investors from here? Is your lead investor from here? Is that the approach that you're taking at the moment?
So we're very focused on the GCC and MENA broadly, from a client or a consumer perspective. But our investors are very diverse. We've got investors. Got investors from the US. We've got investors from Saudi. We've got investors from here. We've got investors from Hong Kong. We're just bringing on a new set of investors that are incredible, also international. And so the world is paying attention to what's happening here, and they're putting their money behind some companies here, which is incredibly exciting. So yeah.
How do you juggle the different hats that a founder? Of course, you have to wear them all, but in terms of specialty and skill set, we see that young companies, it's really important for them to have a sort of a lead VC to kind of help navigate that aspect. And also, you mentioned you have a CTO to handle the tech and the thing and those other aspects. Where are you more focused, and where are the areas that you kind of feel as if you still need to improve on?
Focused on building a great team to handle all of these things. I think
Yeah.
that's the key consideration, because there's so many different things that we have to manage.
Mm.
And so that a lot of my time is kind of is goes to that, trying to build a great team, helping manage the existing team, empowering them to kind of grow in their roles and make decisions. Um, but then otherwise, I focus primarily on the business, so marketing, anything to do with regulation, all of that is kind of in my remit. Kunal, who's our CTO, is very focused on technology, and that's kind of how we kind of think about
Okay.
the company.
Okay. And you raised a seed round of, I think was reported of $1 million, and you mentioned new investors. Is that a Series A, or what's the kind of roadmap? Or appreciate if some of it is undisclosed.
So we raised the we raised the pre-seed round
Okay.
before we had a product and before we were ready to launch essentially. That's all been fully disclosed, and we are now in
Raising
an
the seed.
undisclosed period.
Yeah. Okay. Okay. Fair enough. There's a lot of transparency around that. Like, not everyone kind of discloses everything. I think that's part of the maturity of the region. But you guys are obviously sharing a lot of content and information as well. Yeah. How important is it? I know that you have a lot of content out there. You've been launched for a while, and you're getting ready to release the app that you can trade on from that day. How important is it to have a perfect app and product from day one, or will you be, do you think people will be forgiving and then it's an iter?
There's always going to be improvements, right? I mean, we've given up on building the perfect app from day one, but we've done our best to get it to where it is now, and then there'll be continuous improvement as we go down this life cycle. And you see that with even more established apps that are kind of go through updates and new features and new products. And so that's just a natural progression. Obviously, the things that we do prioritize today is safety, security, all of that. Absolutely no compromise on those things. Product, look and feel, that will evolve.
Yeah.
That will continue to evolve. Yeah.
So do you have a timeline of when the app will launch and then the process? Is it a typical sort of, is it like I'm setting up a,
100% digital. And so that you will have to submit documentation like you would for any other account, but it'll all be through your phone. You'll be able to open up an account in real time, and so that will generally be 5 to 10 minutes, and then you'll be set up. In terms of when we're going to launch the app, very soon.
very soon? Good, good. We're waiting. No, but I think I was going to ask about the what you see as success, but firstly around product positioning and what you want people to know Baraka as in terms of. I saw you guys did a nice clubhouse with Sarwa, which is very good investment type firm, and then there are other fintech, consumer-facing fintech products launching in the market. What sort of, and you didn't completely shy away from the mention of Robinhood. Is that something that positioning? Is that what you want people to think of Baraka as?
As what?
As a comparison to Robinhood, as so something that a retail investment platform.
I think that's. I mean, no, actually, what we want people to think is Baraka, and so however that resonates with people, that's how they should think about the app. What we are is a local investment platform for millennial investors, and so our first product is commission-free U.S. stock investing. We'll build other products, but what we really want is people to, appreciate and understand the amount of content and the amount of product that we put out there for them to, become better investors, to become more confident, to really take control of their own investment portfolios and their own financial well-being. That's what we really want. So however they associate that with whatever brand, that's fine. But
Yeah.
ultimately what we want is for them to associate that with Baraka. We didn't go out with a robo advisory product. We're not asking for people to give us, fees on a monthly basis. That's not what we've been doing for a long period of time, and that's not how we want to establish our brand. Our brand is for people to really take control, learn, understand, develop themselves, That's the big part of our proposition essentially.
Amazing. Yeah, and you're definitely different. I didn't mean that as a definite comparison, but and I'm probably guilty of it, how some people will compare of the X of the Middle East, and we don't want that, of course. But I really, there is a point of, not being focused, again, wrong word, but people knowing what you can do when you get there. For example, uh, in terms of content, there are media companies in the US that have kind of built on top of this cohort because there's passion around that, and they monetize that content and they monetize that media. And I guess a lot of kind of strategy in terms of customer acquisition is build a community first and then acquire. But there's another way around it of, build a product first, and once people land and discover, then it's very clear that, okay, this is a streaming service, there is no community, take my money, sort of thing. What was your sort of thinking with going into so much detail around content, and do you think that is part of a customer acquisition?
I think, when you started the show, you mentioned that we have this newsletter, and so what's interesting is we're putting out stuff that people want, and so that's resonating, right? And so when we looked at the wider landscape and we thought, what is going to get people to invest or get them to think about investing, there was a big piece around content that felt like people were missing in the region. When we surveyed, I don't know, 100 people, they told us, hey, what we really want is content that is financial in nature that I can understand. And so we took that away and thought about many different ways to produce that content. And we started with the newsletter, and it just kind of grew organically. And so, we don't think about, wider acquisition strategies. So basically, again, it's going back to our theme of empowering investors, giving you content that, builds your confidence, gets you motivated about following the news, tracking your favorite companies, all of that. That's what it takes, right? Investing is not just giving money, into a service provider on a monthly basis or whatever. Investing is, if you really want to do it properly, you have to follow the markets. You have to read about certain techniques about investing. There's a whole universe there, and so what we're trying to do is build that universe. And so that's kind of how we think about it.
Definitely, and it's risky, and there's lots of education that's needed around money and the mistakes that people can make. So it's good to have that service as well. So speaking about some of the kind of trends that are currently in retail investing, it's been, as you mentioned at the start, that there's not really a correlation between what we think is a global pandemic and all-time highs in valuations of companies over the last 12 months. How do you, Feras, explain that? Like, what do you think is going on at the moment?
There's been a lot of liquidity that's been pumped into the market, and so it's finding a home. It's finding a home in some stock markets, essentially, in some cases. And so it's part of, it's just it's the market dynamic that's taking place right now. You've got interest rates at zero in the US. I think they've announced that they will continue to remain at zero for the next year or two. And so that means that there's a lot of liquidity that's available. Also, I mean, for a long period of time now, we're starting to come out of this phase, but for about a year, people were at home. Where they weren't really spending money on leisure, as you would have seen in the cruise ship stocks, the movie theater stock, all of that. They took a massive nosedive, and so you were at home, and so people were investing. I think that's a big part of it, and so we'll see how the market how the market recovers. But I think the most interesting point to take away from this is that if you were investing in technology stocks, or you continue to invest in technology stocks, or kind of new age stocks, what you saw over the last period was actually they accelerated in growth, right? Because basically everything we did was digital, and those stocks really just they really kind of came into their own and basically have become massive companies over the last year. And so if you had invested with that thesis in mind, that these are going to be companies of the future, basically all that happened was their growth was just accelerated over a 1 year period for the most part. Zoom, for instance, what an incredible story, right? Everybody's been using Zoom now, and their revenue has just spiked. And so a lot of people saw that trend and invested alongside, and grew their portfolio along with it.
Interesting. Yeah, I think and nice to explain that in simple terms, and also that the companies that did well with retail investors were the well-known names. So even though Zoom had there was another Zoom on some other stock market
Exactly.
that got confusion about.
You got to pay attention.
Yeah, it's fascinating. But yeah, those sort of would you? It'll be interesting the data that you guys get when you launch to see what the demand will it be in the Zooms and the Teslas and the Netflixes and things like that. Um, and so just touching on that and going into another trend that we saw a lot of was this reverse merger or SPAC or PIPE. And we saw Angami do that to kind of list on the Nasdaq from
Right.
here. Is that how do you view that as well? Is it something that you saw coming over the years? Do you think it's again fueled by liquidity, or do you think it's a new way to list as well as kind of initial public and direct?
Um, is it fueled by liquidity? Probably in some part. Obviously, it wouldn't really function well if there wasn't enough liquidity in the market. However, I think where it's really fueled is by this kind of interest by retail investors. And so, going back to the theme of retail investing, this is part of that theme. A lot of these companies are sold initially to retail investors, and it's interesting. It's an interesting way for investors to get access to companies, new companies that not through a listing but through a SPAC. So that's one of the themes. There's a lot more interest from retail investors to take these positions on. I think the other big theme that is very interesting is almost like this disintermediation of investment banks that tend to take these companies public. What you're seeing now is actually the companies are just listing on the exchange themselves through a direct listing, or through a SPAC through a sponsor. And so it's just a different way to get to the market. Ultimately, more companies getting to the market is potentially a good thing, as long as they're good companies. I mean, obviously, we don't talk about the health of the companies; that they're all very subject to the underlying fundamentals of each. But if you believe in the capital markets, and you want more companies in the markets, and more retail investors or more investors generally owning small pieces of those companies, that's potentially a good thing. Gives people more diversification, more opportunities to invest.
Mm, interesting. And are you very much focused on securities and stock markets, or will you be looking at the sort of cryptocurrencies and other coins on your platform?
Look, I think it's something that we'll watch. It's a very interesting space. Um, we could have another whole conversation about NFTs. I think it's an incredible space that's emerging, and it will power a lot of other kind of industries. It's more of an overlay than a single asset, if you will. I mean, you can kind of NFT anything,
Yeah.
which maybe somebody eventually will NFT this conversation, and you'll that's it sounds crazy, but very possible in some weird way. And that just opens up a world of opportunities. And so we're seeing a whole new emergence of asset classes. It's not just it's everything,
Mm.
and so that becomes very exciting. So it's something that we'll continue to watch, essentially.
What do you think are the watch so the kind of cautious points for investors or for even the financial market over coming out of this pandemic with so much liquidity, with so much cash being printed, basically? What where should the caution be?
Leverage. Watch how much leverage you have in your portfolio. Be responsible, invest responsibly, don't take on too much. I don't, you can't speak to each individual person, how much leverage they take, but be responsible in how you invest. It's incredibly important. Leverage is interesting on the way up. It gives you an opportunity to make money, more money than you would if you had, your own capital at work. But it's extremely detrimental on the way down. And I think a lot of young people don't understand the consequences of being highly levered. And that's a lesson that, that people need to learn by educating themselves. And so I think that's the number one thing. A lot of these issues tend to arise because of over leveraged systems. So that is the one piece of advice that I would say is be careful. Be careful with that, right?
It's good advice for someone who's been in the industry a long time, and good that we ended on a cautionary note rather than all the enthusiasm. But it's really nice to speak to you, Feras, this morning, and we'll definitely follow the Baraka story. And keep up the good work, and we look forward to following your growth.
Thank you. Much appreciated.
Thank you.
Thank you.
This show was powered by Zbuni. Once again, a big thank you to them to help us provide this content to you for free. Also, thank you to our producer, Yana Kalashnikova, editor, Alibaba. Please do check out more Dubai Works episodes and other shows over on smashy.tv. You can follow us on social media and download our app, which is available on iOS, Android, and all good smart TVs. See you next week. Follow us on social media and download our app, which is available on iOS, Android, and all good smart TVs. See you next week.